So, many are looking to make a huge bag in 2024. Investing in crypto is a great way to make that huge bag. From the looks of it, the crypto market is gearing up for another supercycle. Hey yo, mic check, 1 2 1 2. It's your boy Dre La Soul back with more crypto wisdom and crypto news for your head top. So, many are looking to make a huge bag in 2024. Investing in crypto is a great way to make that huge bag. And from the looks of it, the crypto market is gearing up for another supercycle. And if you're not in the game, you might be missing out on the next big opportunity. Just got to tell you that. Many new millionaires and even thousandaires are going to be made if people play their cards right and follow the narratives as they come. Because as I always say, the crypto market is about narratives and about hype, because a lot of this is speculation. Bitcoin is the next narrative right now, and Bitcoin-based assets are going to rocket. Where will Bitcoin go, and what are the top Bitcoin assets? All right, we're going to find out in about 10 minutes or so, because it's time for another UrbanBlockchain crypto discussion for your head top. So to begin, we have to talk about the Bitcoin supercycle, as another one will take place due to the hype around the eventual launch of the first spot Bitcoin ETF. Because we already have a futures ETF, but a spot ETF is a way bigger deal. If you didn't know, Bitcoin is considered by many to be gold 2.0, the digital version of gold that is better in so many ways. Now, with that said, we can say that it's safe to compare the price action of gold before and after its first spot ETF as a good bet, right? As we can see, before the first gold ETF launched in November of 2004, gold had an anticipation rally. The price pumped from around $620 in May of 2004 all the way up to $713 by the end of the year. That's a very nice 15% breakout. Now, with the hype and anticipation around the spot Bitcoin ETF, is having a similar thing happening right now, the anticipation rally. Now, it started at the beginning of October of 2023 with Bitcoin at 27K. As of just the other day, Bitcoin jumped all the way above 45,000 for the first time since like April of 2021. A much bigger breakout. That is about 67%. And you can check it out for yourself. Now, if you put these two charts side by side, they look very similar. So we can pretty easily predict after the ETF acceptance news for Bitcoin, the asset could easily follow a similar trajectory as gold, since it's gold 2.0. People consider it as gold 2.0 or digital gold. That gold ETF situation is what we called a buy the rumor, sell the news event. Because after the launch, there was a retracement, meaning that the price fell once the news of the rumor actually hit, followed by an accumulation period, and then finally the extreme bull run or the moonshot. The question is, how much could the retracement be for Bitcoin if we're going to be comparing Bitcoin and gold? The anticipation rally, the retracement after that, the news hits, and then the accumulation. So if it went up 67% compared to the 15% of gold, how much will it fall in comparison to gold, right? Also, how long will the accumulation period last? And what could be the peak of Bitcoin? All right, so let's take a look at gold. Gold retraced from the peak of $713 at the end of 2004 and went all the way down to $667 in July of 2005. So that's about a 7% fall over those 6 months. Personally, I see a similar thing happening with Bitcoin in regards to the time. The first half of 2024 isn't going to be all fireworks like many people expect, but will be more of a retracement. Now, how far could the retracement be? Well, remember the anticipation rally for Bitcoin was much bigger than gold's anticipation rally. 67% for Bitcoin versus 15% for gold. That's nearly a 3.5 times difference, right? Thus, the crash after will likely be more bigger as well, right? So based on that difference between the anticipation rallies, Bitcoin could likely crash by about 206%. It's kind of crazy, but that would put Bitcoin around $31,000 if Bitcoin's peak peak recently before the ETF acceptance was $45,000. Remember, that's the recent peak. And this could happen throughout the first half of 2024. Now, this data is based on the gold ETF, as it is in line with other data on Bitcoin from previous cycles. Now, there's also a technical analyst named CryptoCon who tweeted about analyzing previous cycles and came to a very similar conclusion. Now, they see Bitcoin having a 6-month cool down and retracing down to about 30K. And this data comes from them analyzing previous cycles. Some may say that history repeats itself, or the more things change, the more things stay the same. But this is really nothing to get upset about or to get depressed, because this could be another opportunity to fill your bags. This could be another sale for us to scoop up more. Now, because those fireworks will eventually come, we don't have anything to worry about, in my opinion. Now, gold started pumping after July of 2005, right? And it went on a major rally for the rest of the year, going all the way up to $852 by the end of the year. Now, based on gold, what price would Bitcoin be at if it was to follow the same trajectory? Well, from the 667 low to $852 for gold, that is about a 28% increase, right? Now, remember, the anticipation pump for Bitcoin was nearly 3.5 times bigger than gold's anticipation pump. So that would mean that Bitcoin would pump from 31,000 to about 135,000 by the end of 2024. This actually makes a lot of sense too, because if you don't know about the Bitcoin rainbow chart, it's a price predictor over time that has been pretty accurate, and it's kind of scary. And it's been accurate throughout Bitcoin cycles, right? Now, based on the rainbow chart and prior cycles, about 7 months after the Bitcoin halving, the blue line, Bitcoin starts to trade in the orange range of the chart. This has happened cycle after cycle after cycle, like clockwork. Now, about 7 months after the next Bitcoin halving puts us at the end of 2024, right? Because it happens around April. Now, as we can see, the first orange level during this time puts the price between 114K and about 146,000. That's insane, bro. Now, like I said, the more things change, the more things stay the same. So exactly how can we capitalize on this upcoming bull run? What are the sectors of crypto you should have your money allocated to? Ones which I believe will see massive runs, and again, this is not financial advice, but I say, for one, follow the Bitcoin ETF news and focus your attention on the sectors set to explode. So let's talk about those sectors that will benefit from the Bitcoin pump. So the one that is immediately come in with the Bitcoin ETF news, number one, in my opinion, the sector which will see immediate pumps with the Bitcoin ETF news is or are Bitcoin layer 2s and Bitcoin token assets like ordinals. Now, these are assets or crypto assets that sit on top of the Bitcoin layer, which is the layer 1, right? Which allow it to do more innovative things similar to Ethereum, like smart contracts and NFTs and so on and so forth. So let's talk about Bitcoin ordinals. Now, back in May of last year, ORDI, which is the ticker symbol for ordinals, was just a measly 3.45 cents. And as of just the other day, it was over $80 and hit a peak of nearly $90. So that's a 25x, bro. 25x. In my personal opinion, if Bitcoin reaches 135 racks, 135K, 135,000, however you want to put it, at the end of 2024, ORDI can easily do over a 10x. And I could easily see ORDI reaching about $1,000 a coin. Number two, another BRC20 token looking to build DeFi on top of Bitcoin is called OSHI, OSHI. Well, OSHI recently had a team split. Some of them stayed to build Oshi, while others left and decided to build a new BRC token standard called CBRC20. Well, Oshi holders were also airdropped the new token, MOTO, M-O-T-O. And as we can see, for every Oshi, people were airdropped 1,000 MOTO. Now, checking out the CBRC20 tracker, Ordinal Novus, we can see that MOTO is the second ranked asset, and it's worth about 1.9 cents. Bitcoin layer 2s are going to do extremely well with the Bitcoin ETF news, I'm telling you. Now, the next one we have is Tectum. Tectum staking just went live and is just a couple of days old and whatnot. And the TVL, the total value locked of staking, broke $8 million, bro. So people are super bullish on TET, which is the ticker symbol for Tectum. And its big APY is provided by staking their TET token. But the big thing I'm bullish on right now is Tectum soft notes. Tectum allows notes to be minted on any blockchain. These notes can be spent like cash around the world, which is pretty dope. And this Tectum tweet explains pretty much why I'm so bullish. So it says, minting soft note. You mint soft notes. Minting a soft note creates a wallet on the target blockchain and a new soft note bill. You choose the denomination, which is pretty cool as well. Every minter gets rewarded every time their bill is spent forever, bro. Forever. I don't think you really understand. That's crazy. Now, the people become the banks pretty much. So pretty much every time one of those bills are spent, the banks and the corporations won't get those transaction fees. The people will. And as I've been telling my homies, for a few years now, crypto is about people and about the people winning. Bitcoin is a peer-to-peer asset, person to person, right? It's all about people taking the power back and us actually creating our own monetary system and us being sovereign and having sovereign sound money. Now, of course, it's going to be a little hard because, of course, these big corporations are going to try to take over. But, don't let them eat up your Bitcoin. Don't get scared when Bitcoin drops and sell your Bitcoin to these big institutions because we want to be big institutions ourselves. You heard? That's it for this Urban Blockchain session. Over and out. Make sure you hit the like, subscribe, tell a friend to tell a friend, and share and comment if you like this content, and let me know what else you want to hear. Give me some ideas of what you want me to break down in the crypto and blockchain space. But without further ado, holla at your boy. We out.